The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, checking in on Bitcoin. The CoinDesk Bitcoin price XPX index currently at 37,935. A bit of a bounce, 3.5% over the past 24 hours. The CoinDesk Ether price ETX index at 2821. ETH soaring 8.5% for the day. And the DFX CoinDesk DeFi index at 296. DeFi making an advance about 3.5%. All right, joining us now to discuss the crypto markets is Peter Marber, head of emerging markets at active asset manager Aperture Investors. Welcome, Peter. Thanks for joining us. So just want to get your quick take on what is this crypto market bounce we're seeing in the short term right now?
Well, it's been sort of oversold, and there's been a bounce in the tech space as well. I think you mentioned it in some of your earlier sets. So we're getting some follow through there, and maybe also, some of the people who are looking at rising interest rates and inflation are also sort of maybe jumping in the bandwagon.
So, Professor Marber, as I used to know you as, the El Salvador bonds, that's of course come up as a point of interest for people in crypto because obviously El Salvador is issuing all these bonds that are based on its potential for developing a Bitcoin city. But what was El Salvador like before it got involved in Bitcoin? What was its debt situation like? And why do you think President Bukele kind of made this overture into Bitcoin and into changing the legal tender and adding Bitcoin to its legal tender? What do you think was really behind it from a non-tech perspective? People in the crypto industry always say, well, it's because he sees the future. But what was the fundamental thing behind it?
Well, I think there are certain structural features that we have in emerging markets that actually lend itself to crypto and make crypto attractive. So just remember, in emerging markets, we've got a very large unbanked informal population. We have maybe 1.5 to 2 billion adults around the world who don't actually have bank accounts. We're not part of that system. The International Labor Organization says that about 1 out of every 3 workers in emerging markets is in informal labor. That is, that they're probably being paid in cash. And so they have this large cash segment of these economies. And so a lot of them are heavily reliant on foreign remittances. That's family members who go abroad to, let's say, the US or Europe. They earn money there, and then they go to a money transfer operator and wire the money back home. And the problem is that that wiring, that transaction, is quite expensive. It's maybe up to 10%. So now if we want to go to a country like El Salvador, so it's about a $24 billion economy, quite small. Just keep in mind the US is over $22 trillion, almost 1,000 times bigger. And so what we have is a remittance of, I think it's about $6 billion in the case of El Salvador each year. So you have $6 billion, it's 25% of the country's economy. And to the extent that you can reduce the cost of transferring that money by 10%, that's a big deal. So if somebody's normally wiring $100 to El Salvador, the recipient might only walk away with $90. Not only that, it takes a couple of days for the paper to all be processed. But imagine if you can send $100 equivalent instantaneously. So believe it or not, for El Salvador, adopting crypto or allowing crypto into the system, you get an immediate boost to the GDP of 2.5% if you're assuming a 10% transaction cost. So I think that that's part of the big attraction here.
But what does it do actually for their debt situation? Obviously they have dollar-denominated bonds, and now they're getting involved in a volatile asset, so to speak, with the country using its reserves to buy Bitcoin and it's volatile. Does it make El Salvador a riskier bet? And also too, what do you think of the IMF's criticisms of El Salvador getting involved now?
Yeah, well, you know that I really have spent a lifetime, it feels like, trading sovereign debt, and I think in the case of El Salvador, I mean, it's really unfortunate. I mean, the country really is economically challenged. It's been so for a few years. There's huge unemployment. There's also some social unrest, some gang violence. And you're talking about bonds that have a 1-year maturity now that are trading around 80 cents on the dollar. This is a country that a few years ago was able to borrow in the marketplace at less than 4% risk premium above U.S. Treasuries. Today, we're now at 1,800 basis points, 18% above the U.S. rate. And so clearly the world in general is quite concerned about the economic situation in El Salvador. And I think it's only gotten worse, believe it or not, since the crypto announcement. And yes, you're right, the IMF and World Bank are very, very concerned about El Salvador suddenly, trying to craft an economy around a single crypto like Bitcoin because of the fluctuating value. And that's, I think,
do you think it was
also
a bad idea?
I think that there might have been more traditional ways to kind of stabilize the economy, and I'm not sure this actually has stabilized the economy. And keep in mind that normally wire transfers, when you wire $1, it's still worth $1, when you get there. But imagine if folks had done this with Bitcoin last year. We know from, let's say, April to July, what Bitcoin had a 50% drawdown. And probably has had a 40% drawdown since November. I mean, this is quite volatile if we're thinking about a substitute for money, right? If it's a speculative asset, it's different. But we're talking about here using crypto as some kind of payment, some kind of basis for transacting within the economy. And there you really do need more of a stable coin. So it's surprising that they did really jump on the Bitcoin bandwagon.
Would they have been better going off to using gold as a reserve asset?
Well, some countries tried to do that and borrow off of gold. If you remember, Venezuela didn't help them too much either. And I think that's something also to keep in mind. One of the other reasons that crypto is kind of attractive to emerging markets, and think about some of the biggest, kind of users in crypto around the world include, I think the 5 leading countries are actually all in emerging markets. It's Nigeria, Vietnam, Philippines, Turkey, Peru, all places where people have some questions about the government. And so what you have here is, questions of trust, particularly in a place like El Salvador. Remember that in an emerging market context, we don't always see the most sound economic policy. And as a result, people's money can actually get confiscated in a couple of ways. They can physically confiscate it, like you could have your bank accounts frozen, capital controls can be enacted. But the other way governments actually confiscate your money and erode value is through hyperinflation. So we only have to look at a place like Venezuela, which I think at peak had 1,000,000% inflation rate a couple of years back. People forget about Zimbabwe, also similar amounts of inflation. That just literally wipes away the value of your money. And so if populations are uncomfortable or have distrust, you can imagine that's why they're going to adopt crypto. Even with the potential of maybe losing 30 or 40% of the money, in a short period of time. It just shows you how desperate some populations might be.